Hey everyone, welcome back to the Your Money Your Life podcast. We're on episode 327 of the pod. So do me a favor, wherever you're listening, make sure you like, subscribe, five-star rate and review this podcast because we do this every week. Let's jump into the market update of the week. So telling you a little bit about what's going on. It's fairly good news for I feel like everyone that is a longer term investor. What we have right now, year to date, the S&P 500 roughly above 8%, not roughly, it is above 8%, closer to 9. On the 6 month term, we're above 11% appreciation. 1 month. So this month we've seen the market rocket 10%. So that's pretty heavily bull market. And investors and buyers and long-term holders are just really more investors coming in, more cash is coming in, more buyers coming in. Over a 5 day period, we're up 1%. So last week, but this month is a really interesting one. And what has happened in the last month? One, there's a lot going on. But in general, um, you've seen earnings come in for some different companies, and the earnings have been strong. Cisco surged 15% in pre-market. They posted really strong third quarter results and guidance. They did announce they'll be cutting 4,000 jobs. So the Dow Jones is actually looking to reclaim 50,000 level. It had reached earlier this year. Boeing is up a little bit. And obviously, we know the president, a bunch of tech company leaders, bank leaders, CEOs went over to China for a trip. And the Chinese president, Xi Jinping, could yield some more deals. They're looking to get deals done on this trip. So honestly, I wouldn't claim to know all the geopolitical standings between the U.S. and China as far as like companies go, but I do know that it's harder for companies to be able to do business, U.S. companies to do business in China, and so they're looking to open up that way, that transactional roadway, and so that actual trip is happening now, and so we'll see what comes of it. We do know that the war, the Iran war, is still a major topic of discussion. But again, investors have seemingly been satisfied with what's going on so far, and so they're buying. We still have Brent crude oil prices that are still high, and that played into higher inflation. I don't know if you guys saw the inflation prints, but we did have higher inflation prints yesterday. So inflation did reach 3.8% in April. So this was a 3.8% inflation surge in April. And that is a lot higher. It's the highest we've seen since 2020 on a year over year basis. So that's not good news. It's the highest we've seen since 2020 on a year over year basis. And so prices always also rose 0.6 on a monthly basis, driving the annual rate to 3.8%. This is the highest since May 2023, excuse me, so 3 years, according to the latest consumer price index data that was released on that um, yesterday for those listening Thursday morning. So economists expected a little bit lower, but they did know that we would see a little bit more inflation. Inflation was easing. So this was prior to the U.S. Israeli strikes in Iran. Inflation was easing. It leaped higher in March, and now the energy price shock from the war is further compounding the long-standing affordability concerns. So, of course, one of the factors of CPI is going to be that one of the factors of CPI is going to be energy prices, and that's obviously going higher, and so that's going to play a part. So if you look at this chart, that's tracking U.S. inflation, how recent numbers compare to last decade, the 10-year average is 3.2%. Remember, in 2022, we were really, really incredibly high. We pulled back, we got inflation down to a more reasonable level, but now we are starting to trend upwards again, and that's going to hurt the consumers. That's going to hurt everyone else, right? The post-pandemic inflationary burst, when the annual pace of price hikes hit a four-decade high of 9.1%. That was, again, we saw the chart in 2022. But paychecks grew a little bit as well during that time. But if you think about it, investors and people that are investing in hold assets don't mind inflation because when inflation happens in prices, that also means inflation or increases or appreciation happening in asset prices too. And so that's probably potentially what you're seeing with the market as well. So that's an interesting enough story. And so you got to keep your eyes on that number. PPI came in higher too. Producer price index also came in higher. So producers are paying more for their goods and services that they use to produce items that consumers purchase. So it's all trickling into the economy. And we'll see how that factors in the summer because usually a lot of traveling happens in the summer and that's going to play a part into what consumers do, what the economy does, what transportation companies do, airlines. So you'll have to keep your eyes on that. Speaking of inflation, Kevin Warsh, he has an interesting last name, Warsh, confirmed as the next Federal Reserve chair. So Kevin Warsh has been confirmed as the next chair of the Federal Reserve. So we've been talking about Jerome Powell for what the last 3 or 4 years together here on the Your Money Life podcast, and just in general, as he was the Fed chair, that we'll say he didn't do a horrible job. I would say, like if you look at his tenure, it wasn't too bad. I mean, we had high inflation in 2022. We brought that down. The world has kept going, went through pandemics and different things. Kevin Warsh is now going to succeed Jerome Paul, whose term ends Friday. Man, I wonder if they're going to bake him a cake, send him off in a nice way. But his Senate confirmation won by the narrowest margin in the history of the Fed chair. This comes amid rising inflation and a White House pressure to lower interest rates. So the White House wants to lower interest rates. I think they obviously nominated this gentleman in, and his mandate under the table in back alleys is going to be to lower interest rates by any means possible, or at least convince other people on the chair with him to go along with lowering interest rates. Warsh previously served as the Fed governor from 2006 to 2011, a period marked by global financial turmoil. He will preside over the first meeting June 16th, 17th. So that's going to be interesting to see what his kind of take on these policies are going to be, because again, their mandate is to keep people employed and to lower inflation and to make inflation around 2% target. And so we're creeping up. Wonder what he's going to do as far as will he be able to lower interest rates now that we're seeing inflation and energy prices soar? Can he do that? Because that's going to have a really not great effect if we do see that. But we'll have to keep our eyes on it. Another thing that I thought was interesting, Swatch and Audemars are collabing. So Audemars is obviously a very high-end luxury watch brand, and their Swatch is a mid-lower end watch brand, obviously compared to Audemars, which probably ranges at 100K or 50K per watch. Swatch is like a couple $100, if even. But they're partnering for their Royal Pop Pocket Watch series. It's literally an interesting partnership because you're seeing a really high-end brand with this, a really low-end brand partnering together for a pocket watch series. It has fan interest, but market reactions have been negative, with Swatch shares slipping midday Wednesday over concerns that pendant watches have limited appeal compared to traditional wristwatches. So it's not going to be like a traditional wristwatch. It's going to be a pendant neck watch or pocket watch. Critics also fear the collaboration may undermine Audemars' luxury image, which I understand a lot of people that are saying that about the Audemars, like it doesn't make sense for them to collab. But what they want to do is get into more. There's only so many people that can buy the Audemars watch, while there's a lot of people that can buy this collaboration. I think it's be a 300-400 buck collaboration for the pocket watch, and so they're trying to get downstream into more consumers. It works for some brands, so we'll see if it works for this brand. Their CEO had some thoughts on it. She said the collaboration is driven by commercial logic. Others exist to preserve, transmit, and ignite a passion. The Royal Pop creator in collaboration with Swatch belongs decisively to the second kind. At its heart, it's a project that has a single purpose, perpetuating the love for mechanical watchmaking. No, no, I don't believe that. It's just to make more. You can only sell to so many people that can buy Audemars, and now you're going to be able to um, sell downstream. So we'll see. I mean, it has fanfare. I think they said that there was people outside of New York waiting, outside of a store of some sort, waiting for this to take hold. So we'll see if people are buying it. The summit. So we talked about the summit where um, China, Xi, and Trump agreed to build a constructive China-U.S. relationship of strategic stability. So let's see what's going on. If there's some five takeaways from the summit so far. There's new positioning. The China's president and the US president agreed to develop a constructive China US relationship of strategic ability. And this is according to Beijing's official English readout of the summit. Pre-summit meeting, balanced and positive. So they had a pre-summit meeting that was balanced and positive. The two countries' trade envoys reached overall balanced and positive outcomes at the preparatory summit in South Korea on Wednesday. So they prepared prior to deepening cooperation. This is a bunch of buzzwords. So they're both sides should make better use of diplomatic and military communication channels. This is said by China's president. He also said called for deeper cooperation in economic and trade issues, agricultural and tourism. Strait of Hormuz and oil purchase. The two sides also discussed the Middle East conflict, the crisis in Ukraine, and the Korean Peninsula. This is according to China's readout, which did not offer more details. And Taiwan is most important issue. That's also on there. So a lot of interesting stuff there. Fair enough. Fair enough. I didn't get much from there from besides some buzzwords, but let's jump into something we all love that's not buzzworthy. Our question of the day. Our question of the day, and see if we got something good that we can take away from this. First and foremost, how does how does the cost of a car vary by state? So the question is, which three states have the highest 5-year cost of car ownership? It's going to be placed, obviously, places where they have a higher insurance. So I'm going to say Cali, New York, and potentially New Jersey, but I don't even know. Cali, New York, and then gas prices. So Cali, New York, and I would either say it's going to be another larger state, New Jersey or Texas. That's my best. Oh, interesting. I'm way off on all of them. Louisiana, Nevada, and Florida. When you factor in the cost of owning a vehicle, sales tax, gas prices, insurance, maintenance, and more, car owners in Louisiana, Nevada, and Florida. Interesting. Interesting. The most, at least it's not interesting. So I'm trying to read this. It's just really just the factors of cost of insurance, taxes, fuel, and repairs in those states. That's quite interesting. I wouldn't have guessed. The next question: how much net worth do Americans say it takes to feel financially comfortable today? I have my own answer for that, but I think what people are going to say is what, 750K net worth? I don't even know. Oh, I was close. 839,000 is what people say. 839,000. And this is from Charles Schwab, interestingly enough. From Charles Schwab, 839,000 that people feel comfortable. Those are not bad answers, folks. We have gotten the answers to our question of the day. We have went over everything we need to do in far of current output or current events, which were decent. We talked about the stock market today. Make sure you tap into all the socials and share this with your family and friends. We will talk next week.